The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got a beautiful December 3rd down here at the headquarters of Technical Trading and Investing, TFNN. Just a gorgeous day out there. I was taking the dogs out for a walk just about an hour ago, walking around. Boy, it was tough to come home, even though it's so beautiful. Anyway, another wonderful day. Of course, the markets are already in progress throughout most of the world. And, of course, our wonderful little indexes here, up 5 points on the S&P cash, 2.15 billion shares. So we're pretty much at the point now where we're going to have fairly light volume, and it's probably going to contract all the way into probably Thursday or Friday of next week for options expiration, and start looking for the volume. I'm figuring that by next week we'll probably be in the 1.5, 1.6, 1.7 billion shares, probably in Wednesday. And maybe we'll have one big day, Thursday or Friday, and then that will be it for the end of the year. There just won't be a lot of juice left in this market. So if you are short, you're going to have to watch this market extremely close. Normally you get 2, 3, 4, 5% moves up in a lot of these highly short stocks, and starting to see a few of these things starting to move around. Took a hard look at options pretty much all day today, and going through and seeing what they can tell us. But certainly looks to me like 2070, 2090 before the week before expiration next week. But hard for me to say that there's going to be any upside or significant downside. A handful of stocks with high short interest, 40, 50%, may be the only way of making much money. Gold's up $9, not a big deal. We've got crude out at 66.95, but we continue to see weakness in things like natural gas. The UNG's off, about 19.5 right now. So it's the exits and entrances are getting fairly narrow, which means it's going to be hard for a lot of either juice to come in or go out before the end of the year. Some of these stocks looks like starting to be a little bit manipulated. So we'll have to see how today closes out. But started seeing yesterday a lot of option market makers already start to go delta neutral. I think that they feared getting into light volume and trying to get out of these markets, or at least get neutral in these markets, which is all about going delta neutral. If you're new to the show, delta neutral is when option market makers decide to sell guns and butter to both sides, and hopefully they have a stalemate, and they just want to watch the clock run out and continue to make cash all the way to the end. But they're not willing to take any big chances out there, so they're neither going to be a borrower or a lender. They want to basically hedge whatever side they have that's already made money and try to get out of any positions that are not. But what they don't want to be doing is taking huge risks in the last 7 trading days before expiration with options that may have been out for 45, 60, or 90 days. At that point, the premium's just not high enough for them to take the risk. They just go ahead and take that off. And normally they do that by just buying the opposite side and hoping for the decay to come in and give them what they think is a more probable profit than a larger one. But that's it, as we keep an eye on it. But as always, you can always give me a call at 877-927-6648. And, well, I've had enough of dialing right now. And, we can go back to this kind of drip, drip, drip market. But I can't say that I didn't warn y'all, even into last month, that we're going to drift up higher. The only thing I can say is that we've drifted up a little higher than I thought we were. But make sure to give me a call, or like yesterday, you can email me at path@tfnn.com. And, of course, you can post a message in the den if there's something you want to look at. But normally kind of a quiet time of year. But we can look at it. I think there's one or two plays that I have that I'm waiting for the whites of their eyes to set up. And I think that would be a good trade into the end of the year. So there may be one out here that does give us some options to make some decent money. Couple option positions and actually some leveraged ETFs in the commodity space may give us some options. But we'll talk more about that as the show progresses. Progress or progress? Tomato, tomato. Anyway, on this day in 1984, one of the worst industrial disasters in modern history is a Union Carbide pesticide plant links a lethal cloud of methyl isocyanate gas into the midnight breeze, blowing through residential. Some 3,800 people will die in the next few days after this. In 1984, and thousands more will suffer permanent disabilities. Union Carbide finally settles up for $470 million. By early 2001, Dow Chemical has been acquired by, or Union Carbide has been acquired by Dow Chemical, and it ceases to exist. They are still after the CEO at the time, and trying to get him extradited, but the Supreme Court basically told them that they aren't going to step in. So that's kind of a moot point. As long as he doesn't leave the United States, he'll be fine. Kind of an older guy now. I don't think there's much point in it. But from 1984, it took to about 2001 before all the legal issues were settled. But still one of the biggest problems out there. Of course, Union Carbide said that it was a issue of workers doing this to get better wages or something, and it just got out of hand. Of course, the workers are saying that the plant was not ever safe to begin with. But basically what happened, they had this chemical, and if the chemical was mixed with water, it would gain and basically get to such a high pressure point that it would burst and rupture the the tanks that it was in, and that's exactly what happened. So no one knows if someone turned on water into the thing or just stuck a hose in it or what happened, but there's probably enough evidence that it wasn't the best maintained plant in the world, especially next to a small city. And, of course, the wind was blowing the right way that day, and that was it. But any of these things that could go wrong, I don't think you want to put a big chemical plant right next to 5,000 or 6,000 people. But that's what they'd done in this. And it was unclear whether or not that the native people that ran the location there were more willing to pocket some of the cash than actually do maintenance on it. So there was enough guilt to go around. Several people went to jail, not for long, for a few years, but on this day in this day in 1984. The largest industrial accident of all time, at least everybody thinks it was. Climate change. Of course, we've got the UN out telling everybody that the world has turned into a hellish pit. Unfortunately, when we look at the records for over the summer in the United States and even in the last month, I'm thinking that the UN has an economy with the truth. That's what they have to say. You ever watch that late Sunday night on C-SPAN? They always show the House of Commons, and the Prime Minister has to come out and stand in front of them, and they basically ask him, do you still beat your wife kind of questions. But kind of interesting. But we do have the data in, and why they said that it was warmer in November again, the data just doesn't prove it out. We had almost 9,000 record cold temperatures across the country in November versus about 2,000 record warm temperatures. Those record warm temperatures were mostly in Florida. We were just at the end of it that sucked up a lot of heat out of the Gulf. But much north of here, it was pretty cold. And kind of interesting to see that why things are kind of back to the mean for temperatures across the country. Still seeing natural gas under a great deal of pressure, and I think that tells us something beyond just the price of natural gas. And I think I've been kind of vacillating on whether or not we are in a deflationary economy, but I'm thinking that copper, natural gas, a lot of these other ones, industrial companies certainly are telling us that. In fact, I was going to bring up this one yesterday. I wanted to look at it real quick. I think it's ZINC, Horsehead Zinc, another industrial one. This one's bouncing today, but not on much volume. But certainly zinc, a lot of the other industrial, especially ones used in automotive, not doing all that exciting. A nice kind of bounce out of there today, but still needs to come down and test $13.88. I think that's going to tell us a lot more. Alcoa was another one that was hanging up here at highs, but certainly doesn't look like there's a lot of juice to blow this thing out. Has tested the previous high on lighter volume, 20 million shares on November 21st, compared to the July 23rd high at 31 million shares. So came in, 50% lighter? Not 50% lighter, actually a third lighter. But still hanging around up here. And a lot of people are saying that maybe the Ford F-150 that was supposed to give them so much business may be an underperformer, especially with the price of gas currently. Maybe something changes that and pushes more pressure to use a lot of aluminum in Ford trucks. But I think we talked about that last week. It would take you about 10 years to make back the cost of an aluminum Ford F-150 compared to the F-150 from last year at about 3 more miles per gallon if you use just the EPA test. Reality, of course, is going to be a little bit lower than that. Spread's probably going to be a little lower, so maybe 12 years to make back that at the current gas prices. You'd need gas prices to really spike to bring those back. But Alcoa, just hanging out here. Give me a ring. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we go right to the New York Stock Exchange floor. And let's see what they're saying out here.
Let's put some lipstick on this pig.
Yep, that's pretty much what they're doing all the way till Christmas, I believe, into the new year, which is let's put some lipstick on this pig and put it away and get those big bonus checks from the end of the year, which I think they've already gotten. But they're going to make sure and paint the tape a bit before the end of the year. And, of course, the biggest tape painter is Apple. Of course, it had a little bit of a hiccup and an endless procession of probably not so unbiased commentators have been out over the last couple of days after the huge kind of mini flash crash in Apple. And the stories are getting a little strained out here. I'm not saying that the stock should go down. I'm just saying that they can't even afford to let the stock pull back a little bit right now. Everybody and their dog is along this thing, and that is always a time to be extremely scared. Semis are doing fairly well today. It popped up, but my guess is this thing is probably going to close out the end of the year at about $120. Probably going to have a good first quarter or so. normally by now we should start hearing if they had a ship date for the iWatch. We should start seeing rumors come out in Asia for parts acquisition for the iWatch, and we haven't heard a peep. And that may be one of the reasons why we continue to see everybody coming out and talking about Apple, jawboning it up. But my guess is come the first of the year, it's going to be hard if there isn't an announcement on the ship date for the iWatch for this thing to hang up. And I can see, that, back down to the gaps at 100 and even back down to the gaps at 88 would not surprise me in this. We are watching a great deal of the supply chain for Apple, and it's looking, again, fairly weak. And part of that is China manufacturing and Foxconn and those companies being closed for about 10 days in the end of January, 1st of February. So they have to get a lot of product out. So there isn't a lot of when they're shut down for a while. So they're kind of Christmas. I forget when it is. I don't have to look it back up, but it is several days of late in January, 1st of February, which causes a problem with shipping anything. You got to have a little bit bigger volumes sitting on the shelf, because you're going to miss 10 days of manufacturing over there. And maybe that is another reason why we're not hearing much of a movement in Apple's iWatch. Maybe they come back and that's ready, but they normally, they'll need 100, 200,000 people to build the iWatches, and those signs will go up in these little villages around the manufacturing places. And it's pretty hard to keep that quiet. It always leaks out. But Apple up today on light volume. I just don't see any change in this thing before the end of the year. But at the same time, it seems rather desperate, as Shakespeare said, thus do protest too much. I saw a lot of protesting in the last couple of days on Apple, and gotten kind of a fever pitch with upgrades to prices and sky high. The problem is, once everybody's long, who's going to buy this thing on the other side? So just a thought out there. What else do we have going on out here? If I can find it. That's not it. So it's got to be that one. There it is. I know we talk a great deal about solar power out here. I'm not a big fan of it because it hasn't reached parity with regular, even natural gas expense for being produced. I'd rather wait until the cost comes down and it is at parity. But there was a lot of discussion of how much capacity has been put in, and that capacity has never gelled with what's actually going on in the real world. I always wondered why. There was a fairly decent report coming out, and basically most houses in the United States are oriented east, west, north, south, and most people are putting these panels on the south, where they don't get if you put them on the west side, you'd get a great deal more power. 55% compared to 15% on the south side of the house. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we are back, anyway, a lot of discussion out here about solar panels, but when I looked at the Economist article several months ago, it basically had a fairly bleak outlook on solar power. There were a few things that a lot of people don't think a great deal about. That is, you only get about 8 hours of sunlight in the winter and about 18 hours of sunlight in the summer. So for the most part, you know, you're at the peak, you're going to get 18 hours. At the very least, during the winter hours, you're going to get about 8. But you really need to be reorienting these and following the sun all day. And, of course, most people don't like that because it's not real good looking to have something that makes it look like you're trying to talk to God or something out there in your front yard or even in your backyard. Trees, all kinds of stuff. Everybody wants to have some shade, and of course, you have some shade, then it doesn't make it easy to put in solar panels. But just one of the many problems with using solar power. And of course, as many people have said, I'm trying to remember the guy who said it, but it ended up being government officials never understood that wind doesn't blow all the time and the sun doesn't shine all the time, and the figures that they push out show that. But I finally kind of figured out now why the numbers are so off from what the industry says for production and what you actually are getting back to the grid. And that is a great deal of aiming them, the amount of sunlight each year, whether or not you have sunlight that day, whether it's cloudy, and a lot of things that go into the cost. And if the sun was shining 24 hours a day, probably wouldn't be a bad deal. Probably not a bad deal or a better deal in Florida than it is in Alaska. But interesting nonetheless. Einstein's brain is missing. Well, not really, but it was for a while. But at the same time, lots of brains are missing in the University of Texas, including the one that belonged to the clock tower sniper. But it has nothing to do with the stock market. But what do you do with 100 brains? I could see somebody maybe pilfering one brain. They want to have it in their house or something. But 100 brains? There's got to be something wrong with you if you want to take 100 brains. One, maybe a curiosity. 100, there's something really wrong. Just thought I'd bring that up. According to the journal out here today, basically a lot of people talking about Bill Gross over at PIMCO. And the guy was getting rather nutty out here, and I have two takes on this. One, Bill Gross wanted out of there at any cost, even if it was to his, what could I say, to his personal, I can't even say it right, but it basically goes into him acting rather nutty. We heard some issues of it. A couple of them I hadn't heard, like you weren't allowed to make eye contact or speak to him during the day. Maybe I could just hang a sign when I don't want to talk to anybody. They can't look me in the eye. They can't speak to me. But a great deal more going on out there. He certainly had gotten rabidly paranoid. Found that two people that he thought were speaking to the media, tried to get them fired, both of them. And that is what, I guess, pushed the guys over the edge in there. But when I see the article like this, and I know there's something more going on underneath with Bill Gross. And the question is, did he want to get out of there even if people started calling him nuts because he's got such a time bomb that's going to go off in the bond market that he wants to be out of there and away from blame when it all blows up? Or is he really nuts? Or maybe half and half. Maybe he's smart enough to know that he's made a giant bomb and wanted to get out of there, kind of like Greenspan wanted to get out for everything before everything went to hell in a handbasket. He kind of knew what he'd made, and I'm wondering if Bill Gross isn't much like our famous Mr. Greenspan, which is everybody, when he was in office and head of the FOMC, people talked about him like he was God. Kind of like the way they used to talk about the comedian that is not so much liked in the last few weeks. But he's starting to, I mean, he comes out every once in a while, but probably into 2006, 2007, he was talked about as a god. And it's rarely that you get that kind of discussion before you have a bubble. And I continue to think that maybe there's something really deeply wrong in the bond market, and Bill Gross was more than willing to have people think he was nuts so he could exit before everything blew back on him. And I know a lot of those bonds got rotated out and are moving to other places. But the question is whether or not he just wanted to be out. And I would think that, you know, El Larian leaving, some of those stuff, maybe tell me that there is bigger problems that we know about in this. But when I see an article like this, sometimes people do go insane. I just haven't heard anything from him since he left, and he's moved to Janus. And normally nutty people, kind of like when we think of McAfee down there in the Mosquito Coast shooting his neighbor, or at least allegedly shooting his neighbor and taking off, and smuggling himself back up. That guy'd been nuts for a long time. Wasn't anything new. That he just suddenly starts acting nuts at the beginning of the year tells me one thing or two things. One, he did go nuts, but generally people don't go nuts when they're 70 years old. There's kind of a lead up to it. But just one thought. But that's what hit me today when I read a lot of these kind of things that he was doing. They seemed to be not nutty enough, let me put it that way. A little paranoid. But to get him canned and thrown out, he's a pretty smart guy. I've seen him since, not acting all that nutty. I'm wondering if there is not a method to his madness. Roku is still the lead of boxes out there for streaming set-top boxes. They had probably the big thing is they've had a few years of being out before anybody else's, like Apple TV or Google's Chromecast. But my guess is that the Chromecast is in a huge get-up mode, and probably within 3 months will beat out Roku. Chromecast is going to be one of the most given gifts this fall. Roku's still in the lead, but had 2 years or 3 years head start at 29% of the streaming box sales. But Google's Chromecast in the last quarter came in with 20% of the market. At the rate that they are at, I would not be surprised that they will swamp Roku in the first quarter of next year. I've got a couple of them. I think that they're one of the nicest things you can get for 25 or 30 bucks. And if you know a little bit about computers, being able to basically push anything out of my Chrome browser to my big TV at the other end of the room is awful nice, especially if I want to watch MP3 videos or stuff like that, and sit in my big easy chair instead of sit here in front of a bunch of smaller monitors. But Google is doing good on this. Of course, not really moving a whole lot. They had some bad news. The UK is saying that they're coming after them for taxes. But Google didn't move much. I think that pretty much shows the impotency of anybody saying that they're going to get taxes out of corporate entities. It's going to be a long and drawn-out affair, and in the end, normally corporations have a lot more cash to go after politicians, and at least when I looked at Google earlier, it was down $2. No big deal. Anyway, it is a mad market out there, and we're going to look at some other stuff in the market out here. I wanted to look at a few other movers. Again, you can give me a call at 877-927-6648, or you can email me at path@tfnn.com. Wynn Resorts looks like it's ready to come out here and test its little friend down here at 168.80, the October 15th low. 3 million shares on that day. And we're, a couple bucks? Actually 6 cents above it. I haven't checked the thing, but in with about 1.5 million shares. So energy was stronger than the last pop-up out here from the October 15th to the October 29th low. Now from the October 29th low back down to this low today on December 3rd. Energy was a little lighter or heavier, so still looks like we're going to see a lot of weakness in Macau and gambling over there. I'm not looking for any kind of V-type bottom and win. We'd have to have something dramatically change. But I think what we're going to also see is if China is coming back, it's probably going to be in Win and a few of these other ones first. I think they are the canary in the coal mine, so we want to be watching. Got to be watching out there. Somebody in the den said he was probably mad El Arian beat him out the back door. But I don't know. I was right on the whole thing when the news article came out. I just wasn't able to exploit it. I actually called Andy Heck up about 10:30 at night my time And we were trying to make sense of it. I think that was on a Tuesday. Then on Friday, we found out he was kicked out. But I knew when I saw that first article that Tuesday night, that week he left, something was going on. And, of course, Arian had already left. But I don't know. I digress. There's something going on there. I'm just not exactly sure what. A lot of times you see stuff and your little spidey sense goes off, but you just don't know exactly how to exploit it. Maybe some of the big bond guys can figure out what's going on and tell me. But I'm not a big bond guy. I'm the tech guy. Okean, OKE for the symbol on this one. Made a test with about 25% lighter volume. Has bounced a little out of here. So a few of these stocks are finding some short-term bottoms. It gave about half of the pop out back today. So there's not a whole lot going on in this thing. Let's see what else is going on out here. I wanted to take a look at a few of these stocks with some short interest getting a little bit of short squeeze. NLSN, Nissan Holdings, and this one's back up. This is just kind of at a big trading range out here. Volume is fairly decent. But right back up against resistance at $43.74 from that October 21st high. 3.3 million shares going to come into it. So the volume's not bad out here, but it has tested the lows out here 3 times on lighter volume. So you probably want to look at this one too. But the NLSN, one of the few out here that's put in, I think you can pretty much say a triple bottom out here each time with lighter volume. First time was 6.3 million shares on October 9th. We got into it on October 23rd with 5.1 million shares, and back into those candles once again with 3.4 million shares. Probably wouldn't be a bad bet out there if you were long to have taken that trade. I just didn't see enough juice in it for a $2 or $3 move and a $40 stock to get involved in it. CMI. Trucking stocks are moving out here, probably on lower gas prices. Cummins, a nice little pop out here today. You needed 2.3 million shares to get through the August 20th high, 1.4 million shares, so 4. So going to need some more volume to come back into this one. But again, any of these stocks that have a little short interest out here, pretty easy to pop against folks. Let's see what else we have. Dish is off. It's been downgraded. DISH. Rob Lowe ads, probably not doing enough for this thing. It kind of peaked up on the thought that it was going to be bought out, but certainly looks more problematic as the days go along that Dish will get bought out. It is certainly back into its sign of strength from the 19th of November when it popped up on 15.3 million shares and, of course, back into it with 3 million. So certainly doesn't look like this thing's going to be selling off anytime soon. Could you play this for a move between $73 back up to 79? Probably could. I'm just not. I'd like to see a little bit more juice in a stock than this one. FSL, semiconductors are hot. We'll be looking at this one when we come back. Give me a call at 877-927-6648 or email me at pat@tfnn.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And if you missed the beginning of the show, of course, this is options Delta neutral day. So I imagine we're probably going to see a little bit of action before the end of the day. S&P's up 5 points. Volume is 2.44 billion shares, so a fairly light day for volume, at least lighter than the last, few weeks for the most part. My guess is each day you can probably take off about 50 million shares over the next week. So we'll see tomorrow. Let's see if we come in with about 2.3 million shares at the end of the show. 2.3 billion shares, by the way, at the end of the show on the New York Consolidated Tape. But we'll keep an eye on it. We'd have to have some kind of real surprise, I suspect, to move this market. And I just don't see a great deal of it. Semiconductors Holders Trust is the strong sister today. A nice little pop out here today. When we look at FSL is one of the ones putting some juice into this free sale semiconductor. Let's see where I have this. Find my notes on it. Where's that? raised the low end of their Q3 guidance. FSL. Anyway, certainly is blowing through the previous high of the September 19th attempt back up here, $22.63 through that significantly, 2.5 million shares on that day. We're through it with 3.5 million shares to $23.29 so far today. So, and this thing's hanging out here at the highs. Along with that, just look for these semiconductor stocks to continue. Still, a lot of them people are shorting, and like I said, it's probably, is there a lot much left in it? Probably 2-3% maybe for the end of the year in a lot of these stocks. So there's not much meat left on the bone. But at the same time, a move like this, could you see free sale, a few of these things come up and hit the gaps? I think you could. And, what is that? Another $1.80 to get, $1.50 to get back into the gap from, what is that date? The 25th of April. Most of these stocks are getting back into these gaps. So I like a lot of these things that have gaps down in the very short term. I think a lot of these things are going to have severe problems after the first of the year. But certainly this thing came down with 8.5 million shares. It's basically into that candle back again today with 3.5 million shares. But, that, a little bit of short covering, get back into $25 halfway into that big gap down. I think the answer is yes. And I think everybody else probably thinks that too. So probably not a lot of meat left in the bone. This thing kind of made an ABC. And if you look at that ABC fairly easily, if I can get it up here, I'm having internet problems right now. But what do you have? 15 to $21. Oh, there it goes. It would take you to $24.98 for a 1-to-1. And guess where that is? Right smack dab in that gap. When you get 2 or 3 different things telling you the same thing, as this free sale semiconductor did, you certainly can start looking at those as pretty good indications of what's going to be going on. Let's see if I can clean this up just a little. Internet is not going to cooperate with me. Anyway, hang on for the Tom O'Brien Show over most of TFNN.com for the next 2 hours. He'll be talking about the close for the next hour and the wrap-up of the day in 4 to 5. Anyway, see you tomorrow. Same bat channel, same bat time. Remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.